Hello everyone, welcome to the 14th episode of the Women Startup Leader Series. In this series, key female ecosystem players from Bangladesh and beyond will discuss phases of angel investing and all things startup. In this episode, we have Deborah Quazzo as speaker and Nirshur Rahman, CEO of Bangladesh Angels, as moderator.
Thank you so much, everyone, for joining. So I'll introduce our speaker. My name is Nirshur. I'm the CEO of Bangladesh Angels. Deborah Quazzo is Managing Director at GSV Ventures. GSV Ventures is a venture fund investing in education and workforce skills technologies that are disrupting the $7 trillion sector and named to Insider's inaugural list of top 100 seed investors. In addition, Deborah is the co-founder of the ASU+GSV Summit. Now in its 13th year, the ASU+GSV Summit celebrates innovations and innovators across the global pre-K to gray learning and talent landscape and attracts over 5,500 attendees. Deborah, thank you so much for joining us and welcome to BAN.
Absolutely. Happy to be here.
Awesome. We'll get started kind of with the origins of both GSV and the ASU+GSV Summit. We noticed that you started your career, at least the first portions as an investment banker. How did you end up making that pivot to education?
Yeah. I was a banker, for 13 years really at Merrill Lynch, and then went off and started my own investment bank with a partner, my partner, Michael Moe. Started a company called Think Equity Partners. And Michael and I have been partnered together for 25 years, and he was a growth strategist. And really in the mid-1990s, he began to write a series of white papers. His job was to identify trends and themes in the growth economy and build businesses around them. And in the mid-1990s, he really, which is over 25 years ago, he really identified the education technology sector as one that should come into full bloom as a robust investing category for growth. It had all the underpinnings, huge portion of GDP globally. Incredible dysfunction globally, incredible fragmentation globally, little accountability, little application of technology, and therefore, at the time, lots of frictions in the education category period, but with the application of education technology, and so it had all the underpinnings of a sector that because despite all these things, education technology addresses a really critically important problem, which is, it involves the future. So we like to say the pre-K to gray arc of learning and talent, or learning and skills. It really drives the future, not only of individuals, but of cities, countries, the world, companies, etc. So we felt like it was a huge problem. At some point, the frictions would have to come down to a degree that would draw in great entrepreneurs, probably from other sectors, probably other tech sectors. And that began really to happen around 2010. So we thought about doing a fund. We were conveners and we were thought leaders and we were research analysts and investment bankers and all that sort of stuff. In 2010, we partnered with Arizona State University, which was also not an obvious choice in 2010 for those who follow. ASU is the largest public university in the US, but 13 years ago, they were not famous for their academic or technological prowess. Today, they've been named 7 years in a row as the most innovative university in the United States, ahead of Stanford, Harvard, MIT, you name it. But we were fortunate to partner with them 13 years ago to begin to build what has become the ASU+GSV Summit, which is sort of, we think, the preeminent convening of education innovators from all over the world. And very early on, it was all over the world. We had, I like to say, Baiju came when Baiju wasn't famous. So, and many other of the Indian ed tech entrepreneurs who've now gone on to become, so renowned for their prowess. So anyway, that was how the business built. When we sold our Think Equity Partners, I decided that at that point in my life, I really wanted to dedicate everything I was doing, both philanthropically, civically. I spent 2 crazy years on the Chicago Public School Board under Mayor Rahm Emanuel, and then professionally. So I started something called GSV Advisors, which was a boutique investment bank focused solely on education technology, doing sell-side M&A and private capital raising, and then that ultimately wound its way into our venture funds, which we are about to have first close on our third fund, but our funds are 2016, 2019, and 2021 will be our series at this point. So that's the history.
And thank you for that. I think we can also identify from the history of BAN of being convened by ecosystem builders and then doing more sell side work, and then these days we're trying to make our way into building our own fund as well. So that's quite an inspiration. With regards to the fund itself, and congratulations, you closed your second fund earlier, or it was announced earlier this year, and then you're on your third. And I found this quite interesting, right? This idea of BC and AD, before COVID and after disease. And just curious, between your first fund and the second fund, and now going into the third fund, how has your investment thesis or process changed, I guess, as a result of the pandemic? And in particular, just so, if we can crystallize the difference between Fund 1 and Fund 2's approach.
Yeah, for sure. I don't think the approach has changed. And actually, what led into Fund 1, which really came off of the back of the ASU+GSV Summit, was as we were inviting hundreds of ed tech entrepreneurs to come to ASU+GSV, we started getting approached for investment, and we didn't have a fund. We thought it was too early. So to have a fund, and yet we saw this sort of emerging wave of great entrepreneurs. And so I ended up becoming a pretty active angel investor and ended up with about 100 angel investments. Contributed 21 of those to our first fund, really to advertise that while we didn't have an institutional track record, we had pretty good access. It was Turnitin, Pluralsight, Course Hero, Class Dojo, just a really good list of names. They're actually that portfolio is up actually about 7 times at this point. So very proud of that. But that and so that's kind of how we got there originally. So we've been actually at this quite a while. Just an institutionalized fund was 2016. The difference between the 2016 and 2019 Fund 1 and Fund 2, number one, we became far more international. In the second fund, we made 8 investments in India, 1 in Indonesia, 1 in South Africa, 1 in in Jordan, 1 in Croatia. And so we would expect our third fund to be as much as 50-50 headquarters in the US, not in the US. And that was, we'd been international. I mean, we'd had an international focus through the ASU+GSV Summit for quite a while. We were a small team on our first fund. Second fund, it became more and more obvious that EdTech, the EdTech world had become flat. Companies were moving across borders, exporting. EdTech as an export has been a fundamental theme of ours for quite some time. Companies were moving across borders in ways they really didn't do a decade ago. Companies there had been very parochial. They were American companies, they were Indian companies, they were English companies, whatever, Australian companies. Things are really moving rapidly across borders, of course, with the exception of China, particularly now with what's going on there with the government. But that aside, the rest of the world has moved to an active movement of education services and products across borders. So it was the right time for us to expand our purview and become much more international. Also, I think it made us better investors because we were looking at companies, how they went to market, how their back ends were, what their CAC looked like, what their LTV looks like. We were making comparisons in a much bigger pool, and that was really important. The BC to AD piece, which was written by my partner Michael Moe at the onset of the pandemic, before Corona, after disease, was really to recognize that while we had wonderful tailwinds prior to the pandemic, and the pandemic was a horrendous tragedy for everybody, and which I wish would end, but was that one of the few silver linings in the pandemic was that habits, 1.6 billion student learners were thrown into, as Michael would say, the deep end of the online learning pool and forced to either swim, drown, or get out and never come back. It created a whole lot of habit formation around digital learning, and I think it accelerated what was already going on in higher education. There was no way to meet the demand in emerging markets for higher education with physical buildings. So that was moving digitally very quickly. It was also moving digitally even in developed markets like the U.S., where higher ed population is not growing, we're shrinking, but it's now becoming more and more about working adults, and working adults don't have time for going to a site-based university with marching bands and dormitories. So that was already happening. COVID accelerated that, and you see that in some activity like Coursera. Had huge acceleration in their Coursera for Campus product, and then in the workforce, I think companies now realize that it's about lifelong learning, and companies are going to need to need to have digital solutions for lifelong learning that could be very convenient for their working employees. And so that it was as we saw it, it took a category which we thought would hit $1 trillion sometime in the mid 2030s, and pulled that back probably to the 2028 time zone. So we're going to see, we already see a much larger category. We're actually nailing the numbers down right now for what they look like for 2021. But we've seen a very fundamental and rapid expansion of the category size.
And I think one number kind of thrown out there was almost a 3x growth in CAGR for the global learning market, very much driven by the digital adoption, which that was quite astounding in that time frame. Yep. Curious, when you have a fund focused on education, and when you're raising, are you also working with university or educational endowments? And if so, are there any kind of synergies between their own digitization strategies and
that's a really funny question. One endowment, particularly U.S. endowments, are very fully invested entities that are sort of very hard to crack, and there is a very church and state, almost frustrating level of church and state separation. I remember, I went to my alma mater. I had a conversation I went to Princeton. And they have quite a large endowment, and I had a meeting there 2 years ago, I guess, and I did a pop quiz to see if the team had ever heard of Southern New Hampshire University, which is one of our most innovative private universities in the world at this point, certainly run by one of the greatest innovators, Paul LeBlanc, in higher education today, and nobody had heard of it. And I thought, oh my gosh, there's there's definitely a separation of church and state, pretty important. But yeah, I think endowments are held very, very separate from the actual workings of the university. So we have lots of great university relationships, everything from Arizona State to Southern New Hampshire to Western Governors to many others. But no, it doesn't carry over into the fundraising. I can confirm that.
The sacred and the profane, as you talked about. Church versus state.
Exactly.
I went to a Catholic university, so it takes me back. But another one, so also kind of brought up in this article, that this kind of drive towards hybrid learning models, which is going to be, what's kind of normal going forward. But there's still a lot of frictions that exist, right? And just wanted to talk about, some of the portfolio companies solving those frictions. One I found really quite interesting. Quizzes, they do gamified quizzes and serving hundreds of, working in 100 companies or countries around the world. Really thought that was interesting. Maybe you could talk us a little bit more about Quizzes, especially because there's a South Asian connection, right?
Yeah, no, Quizz is an amazing entrepreneur, and who founded Quizzes. And what he did brilliantly, he and his team, was figure out, he was really quite elegant and simple. He figured out how to make assessment not only painless for teachers. It's a K-12 product. It's in practically 100% of 100% of U.S. schools are sort of nearing that kind of penetration, and it went in a freemium model, and then teachers hit a capacity, and it converts into a paid model. But it makes teachers' lives easier. And it was actually funny. We had Ankit speak on our LP meeting, and one of our LPs has a son who's in high school, and she asked her son about the Quizzes product, and she said he hates school, and he just absolutely lit up like a Christmas tree, whatever. He was so positive and so excited about having Quizzes in the classroom, because it makes imagine a student speaking fondly of taking tests or getting assessments. And so that was the brilliant insight that he had, was that if I can make the implementation of assessments on the fly easy for teachers and enjoyable and engaging for students. And actually, one of the questions that's on here is how do we move towards engagement? This is a classic example of an online tool that is really driving very high classroom engagement, and it can be both virtual classroom as well as physical classroom engagement. In fact, he really started as providing services into the physical classroom. So it's a really brilliant company with an amazing team, and we feel very honored to actually be part of it.
And going back to your theme about kind of the globalization, they're developing, I guess, products out of Bangalore, but they're serving a global clientele. Which
yeah, they went to market really out of the gate. I mean, the insight was that that there was the U.S. system. They really started the U.S. system. They're all over the world, but the primary monetization engine is in the U.S. today. But they're rapidly moving out into other countries. But yes, so they had an advantage. I mean, that's kind of back to the ed tech as an export. You have an advantage back end, an advantage in the quality of the team you can recruit. Although India's gotten increasingly difficult to recruit in the talent wars, they are quite extraordinary at this point. But at the time, and you take whatever advantages you have in whatever country, and then take the product down and have it match countries where it can go to market and be monetized. So that's part of the strategy there. So they're obviously in India as well, but it's a very smart product market fit, product driven company to boot.
Absolutely. On the higher education side, clearly that sector needs to adapt, stop over investing into, I guess, physical infrastructure and more on the actual experience of learning. And just curious, what are some companies that you've invested in that are helping them to kind of digitize their offerings? I saw Campus Logic being one, at least on the financial side, but curious if you could talk to a few of them.
Yeah, I mean, so Campus Logic was that's a software on the back end in the financials, very smart company, really makes the infrastructure better in terms of the supporting everything around the financial financial requirements for universities, primarily in the U.S. I think Coursera is a great example. They are obviously, they partnered now with, I'll give you the wrong number, but north of 200 global universities. They help those universities, actually way more than that, with their Coursera for Campus. In fact, that was a product they launched right before COVID in February, in fact, in India. And the idea of Coursera for Campus is to facilitate the rapid move of universities online and leveraging the Coursera content, which of course is content from all, from many universities. And that product, from the February launch to I think May, went from 0 to 1 million students in hundreds of universities around the world in that kind of crazy trajectory. But Coursera is a perfect example of facilitating universities in helping them create online students. They can have a physical campus, but this is giving them all kinds of leverage of that physical plant. Outlier is another good example. Outlier is the co-founder of Masterclass, Aaron Rasmussen, and Aaron basically wanted to apply the principles of Masterclass, which is beautiful video, engaging video with great instructors from well-known universities, teaching the core courses, what they call general education courses: calculus, pre-calculus, college algebra, statistics, philosophy, et cetera, and deliver that in a asynchronous video mode, but then having all kinds of synchronous activities so that the class has social aspects, but an incredibly high quality learning delivery and at a very low cost. So a very disruptive equation. There are universities that are using, for example, the Outlier calculus course to actually replace their existing on-site calculus course, and getting far higher completion rates when they surround the site-based students with support on campus, through their faculty and adjuncts, but leveraging this incredible Outlier calculus content, and so that's another example of being able to plug in a digital solution to give leverage both to site-based, as well as non-site-based. And they also have a B2C offering where students can just go on and take the Outlier courses in cohorts online. So yeah, that's another good one.
It's interesting you mentioned that, because oftentimes those courses are usually the Weedout courses, right? That you just cram as many students as possible.
That's exactly right. And that was, I think, Aaron's first insight was seeing, and I'm going to give you the wrong number, but how many tens of millions of dollars are wasted every year in college calculus because so many students drop out of it. And so it's just this incredibly wasted human and monetary resource. And so the idea the idea really was to go in and create an engaging, accessible, offering that would actually get students beyond these gen ed courses that are not, or you're right, you're totally right, are viewed often to be just total drudgery, and to allow students to do their first 2 years of college at $400 a course is about 20% of a typical course cost here in the U.S. And so letting these students, and by the way, sorry, the courses are accredited. And so letting a student go in, take these masterclass or these outlier courses, and basically have completed their first 2 years of college or some portion of their first 2 years of college at a dramatically lower cost than a traditional university. And then they can transfer those credits into, if they choose to, into a traditional or into another university to complete the 4 years. Having spent a lot less money than they would have if they'd gone the full through 4.
Another theme, that we talked about is obviously your kind of move towards internationalization. You've been very active in India. We talked to Classplus, actually Mukul from Classplus recently, Indonesia as well. 2 markets that are very similar to Bangladesh in terms of demographics, and I think also just the cultural attributes of education. Just curious, you've taken the experience from the US, but when you go into these markets that are a little bit, where the ecosystems are a little bit less mature, at least from an ed tech standpoint, what are ways in which you de-risk investments? Or do you look for later stage companies, co-investment? Do you look for similar models? Because I do see some similarities between models in the US that you've invested in, models in India and Indonesia, for example.
Yeah, I think all of the above. So we worked in India in particular. We'd had longstanding relationships. We'd actually done banking work in India, representing ed tech companies, and the Indian ed tech companies were very early to come to ASU GSV. Splash Learn. Those co-founders came to ASU GSV probably one of our very first years when we were in Phoenix. And so one, we work on relationships, we work on investor relationships. So co-invest is very important. We do, and then we have deep plugs. I was on the board of Akash through relationships that I had with, not through our fund, but actually through Blackstone relationships. And that was a great learning for me. I've now gone on the board of Simplilearn again for Blackstone. And so we try to kind of find every possible way to develop deep knowledge and relationships with other investors and with the entrepreneurial community. And you're absolutely right. I mean, we certainly do see analogs, model analogs. And I think in India in particular, you can look at just the digitization, what's happening there in terms of the digitization of education and skills, and the sort of the gap, the learning and skills gaps they're going after, very similar to what we need to address in the U.S. And we see some opportunity at Lead School in India, for example, which we're very excited about. We wish we had in the U.S. a layer of low cost private schools that could experience the kind of transformation that Lead is delivering into the affordable school market in India. Guaranteeing schools 70% mastery by grade and subject area and grade level for all its students, which is a pretty remarkable guarantee to make when you actually think about the U.S. public school system, when we're probably taking about a third of our own, only a third of our students to mastery. So to come out with the 70%, that was pretty resonant for us. So we want to learn everything we can about what S.T.E.A.M and S.T.E.A.M are doing. We're actually going to have a podcast or a video cast coming up in November with them and with a couple of other groups out of Brazil and Cape Town, talking about just sort of K-12 transformation. But yes, no, you're dead on. It's all those things. We spent a lot of time this summer diving into Latin America on a deeper basis, diving into Africa on a deeper basis beyond our position with Valenture in Cape Town, trying to figure out exactly where those markets were in terms of maturation and ability to drive highly scaled businesses, some are probably still a little early for us, but we certainly want to be on the balls of our feet. And Bangladesh obviously is seeing incredible activity and would be one that I've actually just talked to the founder of Teachable Anchor about, because he's doing a lot of looking there. We just went back and forth on ideas in your market. We want to be on the balls of our feet and ready when markets turn and where things begin to look scalable and strong entrepreneurs begin to jump in to take ideas to full scale. So.
Yeah, that's interesting that you mentioned that, right? And I know you've been kind of exploring the Bangladesh market, and I'm curious because you've got portfolio companies in India, you've got portfolio companies in nearby markets. Obviously Bangladesh is a large market, and edtech will kind of turn sooner than later. But when you think about market entry, does it make more sense from the standpoint of investing directly into companies, or encouraging your portfolio companies to enter a nearby market like Bangladesh?
That's a great question. I mean, we're not in the business, we're not in the business of telling our companies, what to do. But I think certainly we're seeing a lot of our businesses. We have an investment that'll be announced next week. It's not public yet, but they're, again, another Indian back end and incredible product driven, great entrepreneur. And they're having great success going to market all over Southeast Asia. In MENA, coming into the US would include, some exposure in Bangladesh. So I think, great entrepreneurs figure out where demand is developing and where they can support, where markets can support their offering. And, we tend to, we're very focused on businesses that are trying to create higher access. So typically they're trying to disrupt on pricing and disrupt on frictions in terms of coming in and things like that. So the more effective companies get at that, the more countries they're going to be able to enter that have more restrictions as it relates to GDP per capita and things like that. So
I know you have to leave. We'd love to host you for another round in the future, maybe in person in Dhaka. But there will be young women who will be listening to this. There are young women in the room as well who aspire to be in a position like yours in VC, in angel investing, in tech. Could you give them one or two pieces of advice that work for you?
Yeah, I would look for mentors, look for advice. I think going into VC and tech really requires becoming. I love developing expertise, and so when I became passionate around ed tech and sort of began, I was able to leverage increasing amounts of expertise into becoming an angel investor. I think be a company junkie. If this is what you want to get into, you really need to be a company junkie. You need to want to get up every morning and meet 10 new entrepreneurs and spend the weekend talking to entrepreneurs and you're going to kiss, there are going to be some frogs and there are going to be some princes, and princesses. But you have to be excited by that concept. And I've been excited by that concept for a long time, and it doesn't, as old as I get, it doesn't wind its way down. So, it's get out there, network, establish a community, and establish expertise, and always have a love for entrepreneurship and a love for great new ideas. And in our case, we just care so deeply about, our mantra is all people deserve equal access to the future. And we believe that the best way to get there is innovations in education and skills. And we've got a long way to go all around the world. But it certainly helps you, wake up every morning if you think if you've got a noble cause out there on the horizon somewhere, that you hope that you can make at least a small whack at. So it'd be my advice.
Deborah, I know you have to leave, so thank you so much for spending a bit of your day with us. And we look forward to continuing learning from you and potentially working with you in the future. But thank you so much for your time.
Thank you. I appreciate it. Loved it.
Thank you.